Investing in the Indian stock market can be highly rewarding, but it requires knowledge, patience, and a strategic approach. To increase the chances of earning substantial profits, here are some proven tips and tricks for navigating the Indian stock market. Before diving in, it's crucial to have a solid understanding of how the stock market works. Learn about stocks and shares, which represent ownership in a company. The BSE and NSE, the two major stock exchanges in India. Indices like the Sensex and Nifty that track the performance of the market, and market capitalization, which includes large cap, mid cap, and small cap companies. Successful stock investors don't rely on tips or rumors. Instead, they study company fundamentals by looking at the company's financial health, management, growth potential, and industry position. They also perform technical analysis by studying charts and patterns that show past price movements using key indicators like moving averages, RSI, and MACD. Additionally, it's important to follow market news to stay updated on economic trends, corporate earnings reports, and global developments that impact the stock market. Don't put all your money into one stock or sector. Diversification reduces risk and can help you achieve steady returns. Invest across sectors to gain exposure to various areas like technology, healthcare, finance, and FMCG, and include both large cap and mid cap stocks for a balanced approach. While short-term trading can be profitable, long-term investments tend to yield better returns with lower risk. Focus on companies with strong fundamentals and growth potential, as time in the market often outperforms timing the market. Instead of investing a lump sum, consider investing through SIPs, which allow for rupee cost averaging. By investing a fixed amount regularly, you buy more units when prices are low and fewer when prices are high, benefiting from compounding over time. Keep an eye on market movements and trends, understanding the difference between bear and bull markets, and adjusting your strategy accordingly. Changes in interest rates and inflation can impact stock prices, especially in sectors like banking and consumer goods. Many investors tend to follow the crowd, which often leads to poor decision-making. Instead, rely on your own research and have a clear strategy. Just because a stock is gaining popularity doesn't mean it's a sound investment. It's important to assess your risk tolerance and manage your investments accordingly. Set stop-loss limits to automatically sell your stocks if they fall below a certain price to minimize losses, and regularly rebalance your portfolio to align it with your financial goals. Investors must understand the tax implications of their investments, including capital gains tax, which applies differently to short-term and long-term holdings. Explore tax-saving instruments like ELSS for potential benefits. Consider following renowned stock market analysts and experts to gain valuable insights and learn advanced strategies. Additionally, read books and take courses on investing to improve your knowledge. The stock market can be volatile, and it's easy to panic when prices fluctuate. However, maintaining discipline and patience is key to achieving long-term success. Avoid making impulsive decisions based on daily fluctuations and stick to your investment plan. Accept that volatility is part of investing and view corrections as opportunities rather than threats. While some investors may be attracted to get-rich-quick schemes, speculative investments often come with high risks. It's better to focus on solid, fundamentally strong stocks and avoid chasing high-risk, high-reward opportunities. Regularly review your stock holdings to ensure they align with your financial goals. Consider rebalancing your portfolio if needed, and use investment tracking apps or software to stay updated on performance. The Indian stock market offers numerous opportunities for profit, but success requires a disciplined approach, continuous learning, and a focus on long-term growth. By following these tips and tricks, investors can improve their chances of earning more profits while managing risk effectively. Remember, there's no shortcut to success in the stock market, and consistent effort and strategy will pay off over time.